Thanks for watching Moneycontrol. I am Santosh Nair and I have with me CNBC TV 18 consulting editor Udayan Mukherjee, who will help decode budget 2019. Udayan, good to have you with us. So, what are your first impressions about this budget before we get down to the specific? I just heard you a short while back say that this budget is quite interesting. So, what exactly did you mean by that?
Hi Santosh, good to be on Moneycontrol again. What I meant by the fact that it's an interesting budget is that usually over the last 5 odd years, I've got used to saying on budget day that it's a non-event. It makes no difference to the market or to the economy. But I would have to hand it to the finance minister this time that she's actually put in quite a bit in the 3 or 4 weeks that she's had to craft this budget. It seems like a lot of effort has gone in. Now you may not agree with every part of what she's done, but the fact is that there have been several attempts which have been made in various small areas, which makes it perhaps the most materially important budget of our times. And in that I would have to commend the finance minister because of the sheer effort and thought that has been put in. Could it have been better in a couple of areas? Sure, it could have been, in terms of giving the economy a bit more of a stimulus or a leg up at such a time when it needs a lot of support from the government. Maybe we could have done more, or she could have done more. Maybe she could have done a bit more on the NBFC and space and the credit markets. And maybe she shouldn't have hammered the high net worth crowd with such a steep jump in income taxes. But having said that, there have been many interesting proposals on various aspects which we can go on to deliberate on. So I would say it's an interesting budget with its mix of pluses and minuses.
So, Udayan, let's start with a specific proposal, starting with the surcharge on the super rich. Now, is that one of the reasons why the market is sulking? After all, that particular tax base is quite small, isn't it?
Yeah, I think it's probably the single most important reason for the stock market reaction right after the budget speech, because till that proposal came in, actually two things had happened. The bond yields had softened and the stock market had pulled back from the lows of the day. However, the moment that proposal came in, we saw the stock market go southwards, and it's a knee-jerk reaction to such a steep and sharp increase. I think it's, while you can understand the principle of it, that there is a huge amount of inequality between the wealthy and the not so wealthy in our country, and the government probably is coming at it from the point of view that the wealthy need to be taxed more, and it has not done a wealth tax or inheritance tax. It has simply chose to do it through the income tax route above 2 crores and 5 crores. Now you use the term super rich. I don't think 2 crores plus in this day and age should qualify as super rich. So that's the first thing. Is the threshold too low? Even if you want to tax the real super rich, could the threshold have been much higher? And the quantum. We've had surcharges on HNIs and wealthy people in the past, but they have been a small percentage of the overall tax rate. This time, the incremental tax it goes up from 35 to 39% for people above 2 crores and almost to 43% for people above 5 crores of annual income. That I think is basically, the fact that people who pay taxes willingly, they are the ones who are being penalized very, very heavily. Now, there have been references to other countries where tax rates on the wealthy are as high, but one forgets that in those countries that you're comparing with, there is a social security system for the not so wealthy, and the money from the wealthy actually gets distributed towards social security. In our country, it probably plugs a hole in the ever-growing fiscal deficit picture, and therefore maybe there is an element of unfairness about it as well. But net to answer your question, it seems like a very high jump in the income tax level, and that's the one which has really affected HNI sentiment in the stock market today.
And what about the proposal to increase minimum public shareholding from 25% to 35%? That seems to have evoked mixed reactions from the market. So while the government's intent may be good, that is to improve the liquidity in the market, but there's also concerns that you could see it could increase the supply of paper in the market.
Well, at this stage, sitting on the day of the budget, pending more fine print details from the script itself, which I have not read in full, I would have to say that the first thing is the timeline. How long a period over which this reduction in promoter shareholding has to be done? If it is 3 years, then I think the market will recover and absorb it, because to do this change over a 3-year period will not probably lead to an inordinate amount of supply which chokes the secondary market. That's point number one. B, there are many ways to look at it, frankly, Santosh. The first way to look at it is, this is a market which is totally focused on quality. It has no time for anything beyond the first 15 or 20 high quality names. In such a time, if you have companies like TCS, Avenue Supermart, etc., the top level companies, MNCs particularly, if they have to give you supply of 10% of their shareholding, then there could be a lot of appetite, because there is appetite for quality paper and a complete lack of appetite for anything which is construed as not great quality. So we'll have to see where the supply comes in from, the bulk of it at any rate, and whether because of the notion of quality we'll actually see fairly significant appetite for this fresh supply of paper, and therefore it gets absorbed without disrupting the secondary market. That's an important ponderable to keep in mind, and over what period of time this is spread over. But the initial reaction from the market, of course, has been one of a difficulty, because they're saying, 2.5 lakh crores of supply will come in, where can we absorb it from, on top of the 1 lakh crores plus which will come in from the government in terms of a divestment calendar. This is too much supply of paper. One can understand that reaction. But let's read the fine print before we pass judgment on what should be the actual reaction. The other factor is that because of this improvement in free float, because of the proposed reduction of the promoter shareholding, India's weightage in the MSCI will also go up quite significantly, which means that if all things are equal in the global market space, the ability of India to attract more foreign capital, FII flows into the country, goes up that much, and that can only be a good thing for the stock market and even for the Indian currency. So it's not all bad, and if it is somewhat bad, it also depends on the fine print of the timing or the time frame over which it has to be done.
The other issue which is of interest to the market is the divestment target. Now, a slight increase there. So how is the market looking at that? More than the increase in the divestment target from 85,000 crores last year to 1,05,000 crores, which is a 20,000 crore increase, which I think should be done, particularly because much of it is a fudge in any case. I mean, you saw how cross ownership of PSUs delivered much of that 85,000 crores last year, and I have no doubt that some of that will happen this year as well. The government spoke about strategic sales. Last year they failed with Air India, which will be brought on the table again this year. So we'll have to see if there's anything which is strategic in nature in terms of PSU stake sale. But the one thing which has caught the market's eye today is the mention in the speech that the government is considering lowering its stake in some companies, not the banks, non-banks, to even below 51%. And even the very notion of 51% shareholding of the government might include its own direct shareholding and also the shareholding of government-owned companies like the insurance companies LIC and GIC, which means that the government's actual shareholding may not be 51%, it may be lower than that, which leads one to believe that in principle the government has more elbow room or more headroom to sell down stakes in public sector companies other than banks. Now, this is an in principle thing. I don't think it is true that the government has been restricted in the past, in previous years, in selling public sector paper and releasing or realizing more proceeds from divestment by a 51% shareholding. It has so far not been a major constraining factor. However, the fact that notionally this constraint might be diluted is something which can be seen as exciting by the market, but it's notional, and therefore we should not think automatically that what has not happened in the past few years, despite many promises, which is strategic sales to private companies, will start happening this year. If it happens, the market should take note of it and will be excited, but pending that, we hold our judgment. Udayan, what's your take on the tax collection targets that the government has set for itself? Many experts feel that it's fairly aggressive given that the economy is still slowing.
That is the way the government has reached the 3.3% fiscal deficit target, by saying that the nominal GDP growth this year will be 12%, presuming that GDP growth will be 8% and inflation will be 4%, adding the two to get to 12%. I don't think nominal GDP growth will be more than 10.5 to 11%, and there will be a marked shortfall. Now on top of that, last year we had tax revenue collection growth of 8 to 9%. This year, year to date, FY20, year to date is 0%. There's been no growth over last year. And now we arrive at a number, if I'm not wrong, of a tax collection growth target of 18%. That I think is bordering on ridiculous, and therefore there is every chance that the government will fall short of the 3.3% fiscal deficit target that it set for itself. Given the current GST mood and the monthly collection pace, I think it's extremely optimistic to talk about 18% tax collection growth. Therefore, if the bond market yield has cooled off primarily because of the 3.3% number, then I think it's barking up the wrong tree. Though there is another reason for the bond yields to cool off, which is the government's announced intention of raising some of its borrowings overseas in dollar denominated loans rather than crowding out the domestic market for borrowing. That may be another reason for the bond yields having cooled down today.
So there again mixed reactions there. What do you make of the government's proposal that it raised some of its borrowing, raised some of its requirements from overseas markets?
It's an avenue which can be explored, but one wishes that the government is not terribly aggressive on that front, because the global situation is not great. You don't want to become too vulnerable and open the door too wide to foreign exchange denominated loans, because you basically risk the balance. In the past, we know the pitfalls of these kind of dollar denominated bonds and raising money through these routes, not just at a country level, even at a company level. The State Bank of India experimented with that back in 2003, I think, and the results were not great. So I think as long as the government is aware and cognizant of the risks, we can maybe tentatively explore for small amounts, because you do not want to go about raising your dollar debt at a time when the global economies are heading into rough waters. So it is a possibility, but it's a possibility which comes with attendant risks, which the government will have to be very wary about.
So Udayan, according to you, what are the three key standout features of this budget? The one thing which was good about this budget was that there was a 70,000 crore PSU bank recapitalization package. Our checks with prominent public sector bankers indicates that there will still be provisioning requirements, and maybe half of the 70,000 crores can be used as growth capital by PSU banks. Now you can look at that as some kind of stimulus to the economy. The fact that the PSU bank credit growth will now be higher, which is not only positive for PSU banks themselves, but positive for the economy, because there will be more credit, and credit growth presumably will be a bit higher than what one had estimated earlier. Now in itself it's not a massive leap, because just to put the numbers in context, last year we also had a PSU bank recapitalization window of 1,05,000 crores. That was the revised package for FY19. In FY20, in February we did 48,000 crores. We have now done 70,000 crores. So I don't think it moves the needle that much, but at least in terms of sentiment and some growth capital, it's not a bad thing. So that's one positive. The other positive, which could have been a much bigger one, is the credit line which PSU banks have been asked to give to NBFCs. Now it's been given, but it's given to high ranked NBFCs. So I don't know how much of a backstop it will be in terms of liquidity for the NBFC space. I don't think it's a massive or major panacea for the NBFC problems today. I wish it would have been more. So the two areas, if you ask me, where the government probably has fallen a bit short, despite some positive things in this budget,
much more than previous budgets, is that A, there is no concerted stimulus package for the economy. At best you can say that the government has tried to address the cost of capital part of it by making moves which bring down the bond yield in the market, and now the RBI may be even more tempted to reduce interest rates, and therefore through monetary transmission we might get some kind of stimulus. But there is no great overt fiscal stimulus to an economy which is floundering, and therefore over the next 3 to 6 months I don't see a massive turnaround in the economic fortunes of India or Indian companies, and that's something which the stock market will have to contend with. So we haven't had as much of a stimulus to growth, at least fiscally, as one might have hoped for or expected, given the kind of pronounced slowdown we have in the economy. At best, the government has created enabling provisions for the monetary stimulus to continue, and that being the avenue of some kind of a growth stimulus in the market. So the principal grouses, other than the massive tax overload on HNIs, is that there might have been a bit more of a stimulus, and maybe the government may not have put out 3.3% and put out 3.5% and used those 20 basis points to give a little bit more of a fiscal stimulus. It could have been possible. It could have been more adventurous and aggressive with raising money through divestment receipts, even if it was one time, and use that capital to give some kind of stimulus. And I think that is a missed opportunity once again for this government. And the credit market thawing, which we need so sorely right now, has a mild attempt has been made in terms of sentiment, but actual material attempt has not been that significant. So these are the three areas where I think we could have done more. Having said that, I think we've at least touched upon areas in this budget which have been quite interesting to watch, where we will see probably some kind of improvement in the overall economic domain.
Having said that, how would you look at the market in the medium term, let's say over the next 3 to 6 months?
I think the market, once it has digested the pluses and minuses, particularly learned to live with a very high tax, most of the HNIs in the market and the brokers, etc. I mean, everybody is more than 2 crores and 5 crores income out there, and therefore they'll have to deal with it. And once that is done over the next day or two, because you cannot go on sulking about it, that will move out of the picture. I think the PSU bank recapitalization will also be digested and factored in into stock prices and the market mood. And the bond yield cooling down would have been taken note of. And therefore, come next week, I imagine the market will go back to focusing on fundamentals, which is that basic core economic prospects after this budget do not stand changed very significantly, and the fact that we have entered July and very soon we'll start seeing first quarter earnings which do not look like will paint a very rosy picture at all. And these are the headwinds which the market will have to contend with, along with any other global headwind which materializes. And therefore, in summary, I would say, while the budget was interesting and there have been a few quite smart things which have been attempted, the 12,100 for the Nifty remains the roof over the market's head for the moment, and there is nothing in the budget to improve the mid cap and small cap mood very significantly. So the narrowness of the market continues with 12,100 as the peak, and at best we'll have a range bound market, and fingers crossed after the earnings and pending global cues we do not have a more meaningful correction in the mainline indices.
Well, on that note, thank you so much for speaking to us, Udayan.